You know that feeling. Just scrolling through market news, everyone shouting about the next big
Oh
thing.
yeah, information overload.
Exactly. Well, today on the deep dive, we're trying to cut through some of that noise. You asked for it. Our Stock Analytics AI members Euro 4.99 a month gets your ticker prioritized, by the way, just like this one.
That's right. Like and subscribe, folks.
Today we're taking a close look at IREN Limited. That's a NASDAQ ticker, IREN. As of May 16th, 2025, it was trading around $8.41 a share.
Yeah, putting its market cap at what, just over $2 billion, $2.034 billion roughly. So definitely getting some attention.
Absolutely. So our mission today is simple. Give you a focused, digestible look at IREN's story, its potential, basically pulling out the crucial insights from our analysis.
Exactly. We've done the deep dive so you don't have to sift through everything yourself. Think of it as your shortcut to understanding what's really going on with IREN.
We'll unpack their business, see who's running the show, and then, really get into the numbers, their financial health.
And that's just the first half.
Right. Later on, we'll look at market sentiment, what the analysts are saying, who actually owns the stock.
And crucially, the risks involved. Always have to talk about the risks.
Definitely. By the end, you should have a much clearer picture of IREN. We've used a bunch of sources for this. They're all listed down in the description if you want to dig deeper yourself.
Okay, so where do we start? The business itself.
Let's do it. Understanding the business.
Yes,
What's
sir.
the story with IREN?
Well, what's really interesting is how it's changing. They started out mainly as a Bitcoin miner,
Okay, yeah.
but now they're making a really significant push towards becoming a more diversified digital infrastructure company. Big ambitions in AI and high-performance computing, HPC.
Right, AI and HPC. That's where everyone wants to be, it seems. But Bitcoin mining, that was their bread and butter.
It was, and it's still significant. As of April 2025, they had about 40 exashes per second of capacity.
40 exashes. That's a massive number. Like 40 quadrillion calculations a second for Bitcoin.
Something like that, yeah. And they're on track for 50 EHs by the end of June 2025.
Okay.
But here's the interesting bit, the strategic shift. They've actually decided to pause further Bitcoin mining expansion once they hit that 50 EHs mark.
Ah, so they're drawing a line there, focusing the resources elsewhere.
Seems like it. The focus really looks like it's shifting squarely onto that AI opportunity.
That makes sense. But the mining is still making money.
Oh, yeah. It's still a big revenue driver. In their Q3 fiscal 25, it brought in $141.2 million. That was up 24% from the previous quarter.
Okay, decent growth. And are they efficient at it? What are the costs like?
That's one of their strengths, actually. Their all-in hash cost was reportedly just $23 compared to an average market price of like $54.
Wow, okay.
And the cost to mine one Bitcoin, their all-in cash cost in Q3 was around $41,000.
41K cost and the revenue.
The revenue per Bitcoin they got in that same quarter was about $93,000.
So a very healthy margin there.
A very healthy margin. Plus, their mining fleet is efficient using about 15 joules per terahash. Lower is better, means less energy needed.
Right, lower energy use, lower costs.
And that's helped by their power costs at the Childress facility in Texas, just 3.3 cents per kilowatt hour. That's really low.
2.3 cents, that's a huge advantage, especially now after the Bitcoin halving, right, when mining got harder.
Exactly. That low power cost is a massive competitive edge in the mining space. Okay, so let's pivot to the AI side.
Yeah, the new frontier for them, IREN Cloud.
Yep, IREN Cloud. They launched it in 2024. It's powered by almost 1,900 NVIDIA GPUs,
Yeah.
H100s and H200s, high-performance stuff.
Okay, serious hardware. Is it taking off?
It seems to be growing fast. Q3 FY25 revenue was $3.6 million. That's up 33% from the quarter before.
33% quarter-over-quarter growth, nice. What does that look like annualized?
Puts them on about a $28 million annualized run rate currently. And what's really eye-catching are the margins they're reporting. High utilization rates for the GPUs, and they're claiming hardware-level profit margins over 95%.
Over 95% margins. That's incredible. How are they doing that?
Well, right now, they're mostly operating on a white label basis, so they're supplying the raw computing power to other U.S. AI cloud providers.
Ah, okay. So they're providing the picks and shovels, essentially, for the AI gold rush.
Kind of, yeah. The big challenge and the opportunity, of course, is scaling this up massively while trying to keep those margins high. It's going to get competitive.
No doubt. And all this needs data centers, right? Power-hungry stuff.
Absolutely. And that's another key part of their strategy. They've got 660 megawatts of data center capacity operational now.
660 mil-W.
And plans to get that up to 910 melo-W by the end of 2025.
Okay, significant expansion.
But the really big number is their development pipeline. They have access to, or are developing, about 2,910 megawatts of grid-connected power in North America.
Almost 3 gigawatts. Wow. That's a huge foundation for future AI growth.
It really is. That power capacity is a critical asset. They have two main AI-focused projects underway that highlight this commitment.
Okay, what are they?
First is Horizon 1. That's a 50-megawatt liquid-cooled AI data center in Childress, Texas.
Liquid-cooled, so designed for the really high-power AI chips.
Exactly. Supports up to 200 kilowatts per rack. They're aiming to deliver that in Q4 2025. Estimated cost is around $6 to $7 million per megawatt.
Okay, Horizon 1 and the second.
That's the big one, Sweetwater. Its planned as a massive 2-gigawatt AI and compute hub in West Texas.
2 gigawatts. That's enormous.
Huge scale. The first phase, Sweetwater 1, is 1,400 megawatts, and they're targeting energization by April 2026.
So massive long-term bets on AI infrastructure.
Clearly. So if you look at the breakdown now, Bitcoin mining is still the main revenue source today.
Right.
But AI cloud, though smaller, is growing fast, and the expanding data center capacity underpins everything, especially that future AI growth.
Okay, that gives a good picture of the business and the transition they're making. Let's switch gears. Who's actually steering this ship? The management team.
Right. So you've got the co-founders and co-CEOs, Daniel and William Roberts, often called Will.
The Roberts brothers.
Yep. Daniel comes from finance, infrastructure, renewables, places like Macquarie, PwC. Will's background is more in resources, commodities, digital assets. Also spent significant time at Macquarie, even co-founded their digital assets team.
Okay, relevant backgrounds. They founded IREN together in 2018.
That's right. And they've obviously led this pivot towards AI. The recent positive financials, like in Q3, reflect pretty well on their leadership during this change.
Okay. How aligned are they with shareholders? Do they own much stock? Or are they diluting shareholders?
Well, on the alignment front, they've said they want to use the Bitcoin cash flow to fund the AI growth, specifically to avoid unnecessary dilution. That's generally positive.
Good intention. What are their own holdings?
They each own around 1.86% to 2.0% of the company, so combined just under 4%.
Okay. Some skin in the game, but maybe not as much as you'd sometimes see for founders.
Perhaps. And on the flip side, there's the dilution concern. Over the past year, shareholders saw dilution of about 72.3%. That's significant.
72%. Ouch. That's definitely something investors would notice.
Absolutely. And it's something they'll be watching closely.
What about pay? Executive compensation sometimes raises eyebrows.
Yeah, that's come up. Will Roberts' total compensation was reported at $12.63 million. That's been noted as above average for a similar-sized U.S. company CEO.
Especially if the company wasn't consistently profitable during that period.
Right. That compensation was awarded during periods when they were still reporting net losses overall, so that's a factor investors might scrutinize.
Okay. What about the rest of the C-suite?
Seems like a solid team on paper. The CFO, Belinda Nucifora, has a background in financial services, asset management. COO David Shaw comes from energy, utilities. The chief legal officer, Cecilia Kim, has experience in renewables and infrastructure.
Diverse expertise.
Yeah. Collectively, they say the team's delivered over $25 billion in projects. Average tenure is around 2.7 years, so relatively new team assembled for this growth phase, it seems.
And the board? Independent.
Majority independent, yeah. 4 out of 6 directors are independent, including the chair, David Bartholomew, who comes from energy utilities.
Good. Other expertise on the board?
Looks like it. Digital assets, renewables, tech, finance. Pretty relevant mix. Average board tenure is about 4.5 years, so some stability there.
Okay. Governance checks and balances seem okay? Code of conduct? Audits?
They have formal guidelines, a code of conduct, whistleblowing policy, an audit and risk committee. Pretty standard stuff. A key positive step is their plan to become a U.S. domestic issuer.
Moving away from foreign private issuer status.
Exactly, and they'll start reporting under U.S. GAAP from July 1st, 2025. That should mean more transparency and easier comparison for U.S. investors.
And just definitely a plus. But wasn't there a recent issue with their financials? A restatement?
Yes, good point. They did recently restate financials for fiscal 22 through 24 and the interim periods in FY 25.
What was that about?
It came after an SEC review. It was about how they classified Bitcoin sales proceeds under IFRS, the International Accounting Standards. They had to move those proceeds from operating cash flow to investing cash flow on the cash flow statement. Importantly, it didn't change their reported net profit or loss.
So an accounting classification change, not an operational one.
Primarily, yes. And interestingly, they've said that under U.S. GAAP, which they're moving to, those Bitcoin sales will likely go back to being classified as operating cash flow.
Okay, so that distinction might disappear soon anyway, but did it raise any other red flags?
Well, alongside that, they did acknowledge material weakness in their internal controls over financial reporting. They said they have remediation efforts underway. So while the restatement didn't hit the bottom line, it does point to an area needing attention, something investors should keep an eye on.
Right. Need to ensure those controls are tightened up. Okay, so we've covered the business and management. Let's get into the financial health now, the numbers.
Let's do it. Key metrics. As we said, share price around $8.41 mid-May, market cap just over $2 billion.
And revenue.
Trailing 12 months revenue was about $378 million. Q3 FY25 revenue was $148.1 million. That's up a huge 172% year over year.
Wow, massive year-over-year growth, profitability.
It's improving. Q3 FY25 net income was $24.2 million. That's their second profitable quarter in a row.
Okay, positive trend there. What about EBITDA?
Adjusted EBITDA for Q3 was $83.3 million, so solid operating performance. Looking at Q3 margins, gross profit margin around 58%, adjusted EBITDA margin 56%, and net profit margin about 16.3%.
Those are pretty healthy margins for Q3. But what about longer-term metrics like PE?
Right. The trailing 12-month price to earnings is still negative because they weren't profitable over that whole period.
Makes sense. Price to book.
Around 1.3 to 1.4 times book value. Relatively modest. Return on equity for the TTM is also negative, but they did post a positive return on capital for Q3 FY25, about 4.16%. That's a key metric showing their investments are starting to generate actual returns.
Okay, that positive ROC in the latest quarter is important.
Yeah.
What's the balance sheet look like? Assets, liabilities, cash.
As of March 31st, 2025, total assets near $2 billion, 1.99 B. Total liabilities about $564 million. That leaves total equity of $1.43 billion. Cash and equivalents stood at $184.3 million.
How's the debt situation?
Debt to equity ratio was 0.39. Seems moderate. But remember those $400 million convertible notes they issued? That's debt-like.
Right, convertible debt. And didn't they say they need more funding?
They did. They flagged a net funding need of up to $250 million for the rest of 2025. So debt levels could potentially rise to fund that AI build-out.
Okay, something to watch. Liquidity. Can they pay their short-term bills?
They point to liquidating Bitcoin daily for cash flow. The current ratio figures seem to vary a bit depending on the source, but generally around 0.8 to 0.9, which is a bit below the ideal 1.0 mark.
Okay. Cash flow from operations. This is where that accounting change comes in again, right?
Exactly. Under IFRS, Q3 operating cash flow was reported as negative $211 million, largely because Bitcoin sales were moved to investing activities.
But Q2 was positive.
Q2 was positive, yeah, $53.7 million inflow. And again, under US GAAP, Q3 would likely look much better from an operating cash flow perspective once Bitcoin sales are included.
Right, so that negative number needs context. What about free cash flow?
Trailing 12 months free cash flow was negative $388 million. That reflects the heavy investment phase they're in building data centers, buying GPUs and miners. Not unusual for a high-growth company.
Okay, investing heavily. What about earnings quality? Consistent, predictable.
Well, they have the history of losses, followed by these two recent profitable quarters, so consistency isn't established yet.
And lots of variables, right? Bitcoin price, AI ramp up.
Exactly. Bitcoin mining earnings are inherently volatile, and the future earnings from the AI segment are still uncertain, though promising. Plus, Q3 results had some non-recurring items in there, like unrealized gains. That's why adjusted EBITDA is a key focus.
Got it. So improving financials, but still very much a growth story with associated uncertainties.
That sums it up well. Achieving consistent, high-quality earnings, especially from AI, is the next big step for them. Okay, that covers the first half. Business, management, financials. Ready to move into market sentiment.
Yeah, let's take the market's temperature. What are the analysts saying about IREN?
Overall, the sentiment looks pretty positive, actually. The consensus among the 12 analysts covering them is generally buy or outperform.
12 analysts, and most are bullish.
Yep, 11 out of 12 have bullish ratings. We've seen recent outperform or buy reiterations from firms like Macquarie, Canaccord Genuity, H.C. Wainwright, B. Riley.
Great names.
And J.P. Morgan actually upgraded them to overweight recently. So yeah, generally positive views from the analyst community.
What about price targets? Where do they see the stock going?
The average one-year target seems to be floating around $20.30 to $20.83.
Okay, quite a bit higher than the current $8.41.
Yeah, significant potential upside implied there. The range is pretty wide, though, from about $12 on the low end up to $33 on the high end.
$33. Ambitious.
All right.
But even $12 is decent upside. Of course, analyst targets are just targets.
Exactly, grain of salt needed. But it shows the general expectation, and the recent stock performance kind of backs that up.
How so?
Well, in the month leading up to mid-May, the stock price jumped over 50%.
50% in a month, okay.
And interestingly, after their Q3 earnings came out, even though they slightly missed consensus on revenue and EPS, the stock actually went up about 3.8% in after-hours trading.
Huh. So the market focused on something else.
Seems like it. Suggests investors were maybe more focused on the bigger picture, the AI pivot hitting profitability again rather than just those quarterly numbers. The narrative seems strong.
Okay, the market's buying into the strategic story. What about short sellers? Are people betting against IREN?
There is notable short interest. Around 12–13% of the float is short. That's roughly 27 million shares.
12–13% is pretty significant.
It is, but the days to cover is quite low, only 1.4 to 1.8 days.
Meaning it wouldn't take long for shorts to buy back shares if they needed to, potential for a squeeze.
Potentially, yeah. Low days to cover can sometimes contribute to that. And interestingly, the short interest has actually decreased recently by about 6%.
Ah, so maybe some shorts are closing out their positions.
Could be. Maybe reacting to the stock's run-up or the improving fundamentals. The options market seems to lean bullish too.
How can you tell?
The put-call ratio is low, around 0.42. Means more trading activity in calls. Bets the stock goes up, then puts bets it goes down.
Okay.
And looking at unusual options trades, there was also a lot more call buying activity. Suggests bullish sentiment among some options traders. Implied volatility is high, but the IV rank is low, which creates its own dynamics.
So positive analyst views. Strong recent stock performance despite earnings miss, decreasing short interest, bullish options activity. Paints a picture of positive market sentiment overall.
Generally, yes. But with that short interest still fairly high, there's definitely a debate happening in the market. Okay, let's look at who actually owns the stock. Ownership structure.
Right. Institutions, insiders.
Institutions hold a pretty big chunk, somewhere between 50% and 56%. That's over 112 million shares held by around 230 institutions.
Okay, so big firms are involved. Any names stand out?
Some key holders include BIT Capital, Hansei Invest, Group 1 Trading, BNP Paribas, Susquehanna, Citadel, Morgan Stanley.
And are they buying or selling recently?
Well, in Q1 2025, Citadel, Walleye Trading, D.E. Shaw increased their stakes quite a bit. Situational Awareness LP started a new position, but on the other side, Arrow Street Capital sold out completely.
Interesting moves. What about insiders? We mentioned the co-CEOs own just under 4% combined.
Yeah, around 3.72% combined. Total individual insider ownership is about 6.4%. Not huge. There was mention way back in DX 2023 of a co-founder planning to sell, but not much detail on recent Q1 or Q2 insider trades.
Okay, so mostly institutional ownership. Is it concentrated?
Moderately. The top 25 shareholders hold about 45% of the company. The general public holds a decent chunk too, around 38–41%.
But we have to come back to that dilution point.
All right. Absolutely. That 72.3% dilution in the past year is a major factor, and they still have an active at-the-market or ATM facility.
Meaning they can still issue and sell new shares easily?
Correct. So the potential for further dilution is definitely there. It's a key risk for existing shareholders.
Understood. Which leads us nicely into a broader risk assessment. Let's use that SWOT framework: strengths, weaknesses, opportunities, threats.
Okay. Strengths. We've touched on these. Low-cost Bitcoin mining, potentially using renewables, the strategic AI pivot, secured power capacity, data center expertise, recent profitability.
Weaknesses.
History of unprofitability before the last 2 quarters, high CapEx needed for AI, reliance on volatile Bitcoin, that major shareholder dilution, limited track record in AI services specifically, the financial restatement we discussed, and maybe the executive pay levels.
Opportunities.
Huge demand for AI and data centers, potential to leverage their low-cost power for AI, growing need for specialized liquid cooling, potential for strategic partnerships in AI.
And the threats.
Intense competition in both mining and AI infrastructure, especially from hyperscalers. Bitcoin price volatility, obviously. Execution risk. Can they actually build out these huge AI projects and get customers?
Right.
Plus, technology changes fast in both mining and AI risk of hardware becoming obsolete, regulatory risks around crypto, data centers, energy use, energy price swings, counterparty risk with AI customers, ongoing securities litigation, and the U.S. tariffs from 2025.
Yeah, let's unpack those cares a bit more. They hit imported tech components.
Exactly. April 2025 saw tariffs on various goods. For Bitcoin mining, that means higher costs for the ASICs, the mining chips, which are mostly imported. Early talk was about tariffs potentially hitting 24–46%.
That would definitely impact the cost of expanding their mining fleet, even that last bit to 50 EHs.
Could do. And the impact on the AI side could be even bigger.
CPUs, servers.
GPUs like the NVIDIAs they use, plus future ones like Blackwell. Also semiconductors, servers, networking gear, cooling systems, even construction materials for the data centers like Horizon 1 and Sweetwater.
So basically everything needed for the AI build-out could get more expensive.
Potentially significantly more expensive. That could squeeze their returns, force them to try and pass costs on, disrupt supply chains, maybe even slow down projects if costs get too high.
And IREN is right in the crosshairs, relying on imported miners and NVIDIA GPUs and building in Texas with global materials.
Seems that way. We didn't see specific management comments on the 2025 tariffs in the info we reviewed, but they do list tariffs and duties generally as a risk. It's a definite headwind to watch.
Okay, so adding tariffs to the list of execution, market, competition, and financial risks. It's a complex picture.
Very much so.
All right, let's try to bring this all together. Thinking about, say, Warren Buffett's value investing ideas. How does IREN stack up? Understandable business.
Well, it was maybe more understandable as just a Bitcoin miner. Now with the big AI pivot, specialized data centers, it's gotten way more complex. The long-term economics of the AI side are still unfolding.
Right. Does it have a durable competitive advantage? A moat?
They're aiming for one with low-cost power and specialized data centers. But whether that's truly durable against huge competitors in a fast-changing tech landscape, that's the big question.
Management. We discussed the founders, the pivot seems smart, but there are those questions around dilution and pay.
Exactly. Ambitious and capable, yes, but alignment isn't perfectly clear-cut, maybe.
And intrinsic value. What's it really worth? Hard to pin down.
Very hard right now. Past losses mess up traditional metrics. The future value depends so much on executing this massive AI strategy successfully. Analyst targets point up, but they're based on that execution. Doesn't feel like a classic margin of safety situation.
No, definitely not buying $1 for 50 cents here, potentially. So what's the bottom line? A recommendation.
Given everything, the high growth potential, but also the very real risks, the transformation they're in, it feels like a speculative buy. But only for investors who have a high tolerance for risk and are looking long-term.
Speculative buy.
Yeah.
And that's based on some key assumptions working out.
Absolutely. Assumes they execute the AI plan well, sign up major customers, stay profitable, manage their capital effectively without excessive dilution, and maintain that cost advantage, especially power.
What should investors be watching most closely then?
Definitely AI customer traction. Are they signing deals? Progress on Horizon 1 and Sweetwater. Are they hitting milestones? Consistent financial performance, especially margins, how they manage funding and dilution, Bitcoin market conditions, of course, and how they handle those tariff impacts.
Okay, so summing up, not your traditional value play.
Yeah.
It's a growth story, big potential upside, but matched with significant risks. No easy margin of safety.
Precisely. Which leads to maybe a final thought for you, the listener. In this world where finance, digital assets, AI are all colliding and mixing, where do you think the really big investment opportunities will be next? And what kind of skills do we all need to spot them?
That's a great question to ponder. And speaking of next steps, our final hook, subscribe. Stock Analytics AI YT. Find us on YouTube.
Please do. And just the necessary disclaimer. Remember, everything we discussed today is for informational purposes only. It is absolutely not investment advice.
Our analysis uses public info. We aim for accuracy but can't guarantee it. Investing has risks. You could lose money.
Always do your own homework, your own due diligence. Talk to a qualified financial advisor before making any investment decisions.
Well, thank you for taking this deep dive into IREN Limited with us today. It's definitely a complex story, constantly evolving. We hope this breakdown gave you some clarity on the key pieces.
Definitely. Remember, in markets like these, staying informed, doing your own research, and knowing your own risk tolerance, that's absolutely key.
Couldn't agree more. And that wraps up this deep dive. Hope it helped cut through some noise for you. Until next time.